Hi, I'm Terry Womack. I'm a realtor in Northwest Georgia. I cover Georgia, Tennessee, and Alabama. And I'm sitting here in the beautiful Chickamauga National Battlefield thinking about the mortgage portability option the government's trying to create. And two things bother me. One, it's a net zero on volume. You have an individual selling a house, individual buying a house, that's a zero. You never know the house they're selling. We don't know if it's going to be in a desirable area or at a desirable price, because the portability option would not take into account the price of the home you're selling, the amount of the mortgage you're trying to move, nor the price of the home you're purchasing. So that leads into number two. The number two issue I have is you do not have enough equity in the mortgage you're moving. You're going to end up with a second mortgage at a much, much higher rate, even at a higher rate than what you currently can get on a first mortgage. So you're going to have two mortgages on your property because you've got to pay the equity difference between your mortgage and the price of the property. How are you going to do that? Cash or another mortgage. And that really does limit your possibilities for other assistance if desired. To add to that, your overall price for both mortgages could be more than a single first mortgage at a current rate. So when you look at all of that, and then you add in the possibility, what if your mortgage that you're trying to move is more than the price of the property? Well, banks typically do not finance properties for more than the appraisal. So that means you're coming up with, at the closing table, a big lump sum of money to pay down the current mortgage that you're moving to bring it in line with the appraisal of the property you're trying to buy. So either case, whether you're paying the equity between your current mortgage that you're moving and the current price of the house, or you're paying off a portion of that mortgage you're moving to make it match the lower price of the house you're buying. Either case is not conducive to a smooth transaction and a consumer-friendly transaction for that buyer. So my suggestion is marry the house, not the rate. You can always refinance later as interest rates go down. You can always refinance to that lower rate. Get in the house, get whatever assistance you need to get into that house, whether that's concessions from the buyer, local loan products, local state-funded grants, or state-funded programs. There's a lot out there to help you move into a house. If you want to know something about the North Georgia market, the Tennessee market, or Alabama, make a comment in the bottom. My link tree has calendars in it and phone numbers and whatnot for you to reach out if you'd like to call. Otherwise, you can actually schedule some time with me by clicking the calendar link in my link tree. Let me know if you have any questions, or let me know what you think down in the comments below.